presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Richard Bach. To bring anything into your life, imagine it's already there. No doubt. Market-wise, let's take a look at it out here. We have the Dow down 21, NASDAQ off 7, S&P's a flat. Gold contract down $5.80, traded at $1,316 an ounce. Silver off 3 cents at $21.08. Platinum down $4.50 at $1,469 an ounce. Copper flat at $3.17 a pound. Light sweet crude down 89 cents, traded 105.61 a barrel. Bonds, you have the 10-year up 7 ticks at 125.01. 30-year up 17 ticks at 137.01. King dollar up 15 ticks at 80.28. You have the euro down 19 at 136.10, and the yen off 14 at 101.72. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You're down $3. Realistically, you get a flat market. We're at 1956.33. We got to 1944.69. I'm going to put the futures up so you can see exactly what we did out here. And markets deviant as usual. This is pretty cool, though. So check this out, folks. So markets, no doubt, as one of the targets saying in the den, the bears gave it up too easy. Bottom line, each and every day, market's up, right? Well, check this out. And that's a fact, no doubt, okay? But check this out. This is pretty cool. So you go back 3 days in the marketplace. What I'm looking at right now, folks, is a 3-day chart of the S&Ps, the mini S&Ps, on a 10-minute basis. And if we go back to yesterday morning, what you had is this, is that, you know, at 6:30 Eastern Standard Time, you're at 1945. You get down to a price point at 840, still before the New York Stock Exchange opened, you're at 838. When the exchange opens, what do? We get down to 838 flat out once again. Now, at 838, what do we have down there? Well, we have a high volume low intraday. Okay, and that was right at the bell. Oh, it was 9:30. That 1938. Okay, it cruises all the way back topside yesterday into the close and closes at ice from the day prior. Because the day prior, of course, we were at 1959 on the S&P. Start edging back down to the price point of 1950, and that's where ice was. That's where volume came out of the market, and we came lower. Well, as the market crawled yesterday, it got crawled all the way up to ice. Okay, that's a natural retracement in a market that or anything else that's going down. Okay, when you come back up to ice, if you come back, first off, if you go down, wide price spread accelerated volume, you come back up. If it's light volume, that's a normal retracement. That's a market that's going down. A market that's going up, you'd go up with wide price spread accelerated volume. As you start pulling back, you pull back into that area with lighter volume, so the market wants to go up. Okay, so now let's talk about the deviance. It's really cool, too. So this morning on the open, right, Europe's doing all right, no big deal. Well, what ends up happening? First off, at 9:20, you test the high of yesterday, no juice, and then ba-boom. This, man, someone threw so much at the S&P, it was amazing. And what did it do? So it goes back down, folks, and tests the lows of yesterday in 10 minutes and blows the lows out by 2 points. By the way, with volume. What do? We crawl all the way back topside again. Okay, so this is where we are now. We crawl back topside. We have lighter volume. But guess what? We have a high volume low that's sticking out there once again at the 1938. Okay, now let's get back to the SPX for a second. Because what you have is that you're at highs. We're at highs again. We are at that high, however, with the high that was generated out here today. This is a nice hanging man. What a hanging man specifically is that if you got one of these at the bottom, you'd be stood that as a hammer, okay? At a top, that basically is a bearish signal. We'll see where this baby shakes out tomorrow. But I suspect, just as he was out here today, the surprise is now, folks, will be to the downside, because that moved down fast, was fast this morning. Dow Industrials. What do you have with the Dow? Same type of setup in the Dow. In fact, what the Dow has, if you're into candlestick charting or council charting, whatever you know, it's the same deal. What you have here now is this. You have a little doji at the top on the 9th of June. You have another doji at the top of the 20th of June, and now you got a hammer on top of that. I mean, hanging man on top of that. NASDAQ Composite. What do you have with the composite? This is what you have with the composite. Same setup. In fact, the hanging man of the composite is really insane. This is about as good as you can get. Now, what does happen with a 2-day signal is that you have to get a close under the high of today. And this went just about as much as it could go. You got the composite got down to a price point of 43.47, closed at 43.79, and 43.79.80 is the high. So let's see. So that's now let's go to the 3 Qs, the NDX 100. What do we do at the NDX 100? NDX 100 does the same thing. Gets down to a price point of 92.62, rejects that lower price, close at 93.33. Now, this is where this gets interesting in this one. It's still a hanging man, but when you look at the 3 Qs, it's like, okay, were you going into the lows of yesterday with lighter volume, or are you pushing into the highs? The bottom line, folks, is it's an inside day, so you really can't call it. You know, so the hanging man is there. We'll see where this baby shakes out. Gold contract. What do we have with gold? With gold held nice coming into a Friday, I can tell you that. They had gold down this morning, got down about $10, $12 very quickly. Guess what? Came all the way back up. Gold's building cause, folks, for 13.17. That's building cause to get to this 13.92 area. Silver, same setup, and silver meaning it's building cause for higher price. We take a look at the silver market, and what silver has shown, folks, is that silver is stronger than gold, technically stronger than gold. What we did have, which was so cool, silver was and is stronger. It absolutely was stronger even before we got the uptick in a huge way on the 19th of June. What did happen right then, though, is that you had gold and silver go simultaneously. Don't be surprised to get another monster day like that. That's the way this thing seems to be shaken out. Now, bonds, okay? Bonds are such a trip, it's unbelievable. Bonds are on the next leg higher, folks. You had the 10-year. Yesterday, it got out of its lower range. The 10-year today went up with 1 million contracts. We're trading 125.01. Your swing point's 126. You know, that baby's going to get up there. If we get volume, you get an additional ABC structure on the way up. 30-year. What did the 30-year do? 30-year goes topside also. She's out of her lower range. We're at 137, and the 30-year is actually stronger than the 10. The 30-year, 138.10 is the swing point. If we get volume up there, that's going to be an additional ABC structure on the way up. 142 looks game. King Dollar. What do we have with King Dollar? Well, King Dollar, she has continued to go to lower price. Lighter volume, she keeps rejecting lower price. So she's at 80.28 right now. And, you know, she can get down to 80.08 rather. You know, but King Dollar looks to me like she's building cars to get up into not only the 17. I expect you're going to see 81.50 out of that area. DuPont just come out with numbers. Let's see what's a, whoops, one, save, no, I don't want to save that. Okay. DD, we go look at DuPont. What do we have with DuPont? DuPont closed at 67.70. It's trading at 66.10 right now. And numbers on DuPont go like this. They're cutting their forecast, number one. The consensus was $4.30. They're coming up with $4 to $4.10. Nike worldwide future orders ex currency is up 12. The estimate was 11.7. It's amazing. Earnings are starting fast and furious. Let's see what Nike's doing. Nike closed at 76. It's trading 79. We'll be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom, take your phone phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finished down 21. NASDAQ was flat. S&Ps were flat. And as we do each and every Thursday at 20 past the first hour, we get our man, Mr. Andy Hecht. And don't forget, folks, at TFNN, we do 9 hours of live programming every trading day. 9 o'clock in the morning, 6 o'clock in the evening. All of that programming, folks, you can get right on your cell phone. How you do it? TFNN.mobi. That's all you have to do. If you want to get Tiger TV right on your cell, do TFNN.com. On the right-hand side, when the web comes up, you'll see a little box that has devices in it, meaning phones, iPads, computers. You just hit that box. Our servers will know what type of device you're on. You get delivered the charts plus the audio. Man, Andy Hecht does a great show each and every Tuesday, Thursday, 3 to 4 Eastern Standard Time. Also has a newsletter, the Technometer Commodity Report. You can test drive it right now, 1 month, absolutely free. The way you do that, you come over to our website at TFNN, go to newsletters, trading newsletters. You see the Technometer Commodity Report right there. You can test drive it right here, right now. Andy Hecht, what's going on?
How you doing, Tom?
Doing great, man. You having a good day?
Yeah, everything's going well. Everything's well.
Are you frying? Are you frying eggs on the sidewalk in Las Vegas? Yeah.
Yeah, I'm staying inside.
Yes. But you got dry.
I stay inside.
You have dry heat out there. Yeah.
It doesn't matter. If you stick your head in a microwave, it's still hot.
Oh man. Seriously.
So listen. I heard what you're saying about gold. I have to tell you, my gut is boiling here. I see the gold shares up today with gold down. I think we could be in for another leg, maybe even tomorrow, gold and silver.
You know, the way that I see this, tomorrow would be a great day for it to happen. You know,
it is. It's a crazy summer Friday thing.
I was listening to your program. Yeah, there's no doubt, man. I mean, what happens on a Friday, folks, is that in the gold market and the silver market, when a trend starts going, it can be highly volatile. And in this particular case, Andy and I, we think the trend's up. And they can get that thing going. And, man, when they get it going, in particular, we just had this leg up last Thursday. And, you know, it's set up. I think it's set up. The equities are set up for ABC structures. A lot of them have taken out the B point thus far, taken it out with volume, and that's what it takes. So, and there's still, I got to tell you this. Oh, my God, this is funny.
Go ahead.
This is probably a good indication. So CNBC calls me today, and this is like, this kills me too, folks. Okay, because when I was a bear, it was fine. Okay, it's not fine. They were having a bull bear deal this afternoon, right? And so the producer's saying to me, "You a bear, Tom? Are you a bear?" I says, "No, I'm a bull." He saw, that's a bummer. I says, "I know."
They needed the bearish Tom, not the bullish Tom.
They did.
Well, you know, look. It's like the setup last week. Last Wednesday we saw gold was doing nothing. The equities were positive. See the same setup today. That's why I think we could have a really nice move tomorrow. And I'll tell you, we get a move tomorrow. We could see $25 up in gold. We could see, silver up 50 cents to $1. We could test that $22 level. Silver's going to lead this thing.
Let me tell you something. If we get a move up tomorrow, I would say we're going to have $50 to $70. It's going to go. It's going to go right to the swing point. There's nothing to stop it.
There is nothing to stop it.
And particularly on a Friday. You know what I mean?
I really like it here.
Yeah.
I really like it.
And silver definitely is stronger. And that's I like the setup because, we were saying silver was stronger before, and it was. And, gold caught up quickly, but silver's still stronger right now.
62 to 1 on the ratio. The long-term average, 55 to 1. That would put... At $13.15, that would put the price of silver at $24 if historical norms hold. Okay. So silver's still cheap relative to gold here.
Isn't that cool? Yeah, I like that.
It is cool. So I like them both. Hey, I want to point something interesting out. All right? Orange juice futures absolutely tanked this week. We spent 3 months trading around the pivot point. Let me put an orange juice chart up here. I love orange juice because it's the trading places commodity. All right, so we spent 3 months trading around the pivot point of $1.60, $1.60.
Okay.
We traded up to 165. We traded down to 155. We just nice trading back and forth. This week we cracked. Why did we crack? We cracked because orange juice prices were pretty high at 160. And it turns out that demand for orange juice has gone down because of the high price. Actually, U.S. retail sales for the 4 weeks ending June 7th fell by 6.9% from a year earlier. So higher price, lower demand. And where I'm going with this, Tom, is I'm going to throw another chart up here.
Okay.
And that chart is for the carnivores, is the bull market, no pun intended, cattle.
Yeah.
All right? I don't know from where. Listen, this is a market of today's highs or tomorrow's lows right now. But at some point, the high prices of steak and burgers and roasts and all of this beef is going to come back to haunt us. And we're going to see a move like we saw in orange juice. The demand is going to go down. That's the bottom line.
Hey, you know,
at some point.
Oh, 1 second. Ruth Chris, is that R-U-T-H? We got to look at this. 1 second.
Ruth Chris, yeah.
Ruth Chris.
They're the guys who inject butter into their filet mignon.
I know.
Just for your health.
Just for me. Butter's good for you.
I know it is. I know it is.
This is interesting. Now, Ruth Chris hasn't moved yet, but Ruth Chris is at $12.
Imagine they gotta raise the price of the filet mignon from $38 to $50,
and she wants to go to
keep profit margin.
She wants to go to $7. Yeah, that's why I'm looking at this, because last night, we were eating at a steak restaurant, and I was looking. I don't know if they went up on the steaks or not. I'm not too sure. They might have, but I forget actually.
They're going to have to.
No, they're going
to.
That's my point. But what does happen? There's pushback there. Do you know what I mean? So you start paying $50 for a good steak. It's like, no, I'm not going to pay $50 for a good steak. You know what I mean?
I'll order a pork chop for $30.
Yeah.
But it's interesting. But I thought what's happened in orange juice this week is it's very typical of commodities. Prices go up big. Yeah. It's just the elasticity of demand, right?
No, I absolutely agree. Yeah, there's no doubt.
So at the end of the day, that's what's going to eventually cause this rally in cattle to go down. But from where, Tom, it's very hard to pick a top. Yeah. Very, very difficult to pick a top.
Let me bring this cattle one up again. I'll tell you, folks, what's amazing is that, I go from indices to commodities to currencies and trade a lot of different things. And I'm so glad I'm not trading cattle right now, because I was trading cattle quite a bit, Andy, a couple of years ago, because what was happening, folks, is that at 131, cattle was high, on a very long basis. And so it was kind of fun trading it there. Do you know what I mean? Because what happens is that it moves very quickly, folks, meaning not at that level, it was only moving, 3 or 4, and so that wasn't killer either way. And then I just moved on. I went to something else, and thank God I did.
What was the base price then? Around 80 cents?
It probably was.
Do you remember? Yeah.
I can bring this back further.
We spent a long time,
We did, and it was a decent thing to trade because it didn't kill you. It couldn't, it was both ways, folks. You know what I mean? You wouldn't make a fortune on it, but you wouldn't lose a fortune. But I like
exactly.
I like trading it because if you could hold on, you always could chip out something, basically.
I mean, now it's starting to smell to me like blow off top a little bit here, but it's very hard to pick a blow off top.
No, yeah, you stay right there for a second.
Okay.
Andy Heck, Tom O'Brien, we appreciate all you tigers and tigresses growling problem with us. And there's no doubt, our man Terry in the Den, and this is a great quote. Our man Mr. Ed Young, God bless him, the cure for high price is a high price. We love you, Ed. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish down 21, NASDAQ off 7, S&Ps were flat. After the close out here, folks, DuPont come out with numbers. They're down about $1.50. Nike come out with numbers. They are up $3. They closed at $76.86. They're trading at 78. Well, I guess they're up $2. And 78 is going to give them the high out here, folks, that I suspect you're probably going to, their gun for is $80 right now. Andy and I were talking commodities and bingo. So, you know,
go ahead. I was going to say, should we take a quick look at natural gas?
Yes. We're on the same
yeah, okay. Interesting day. key reversal to the downside. We made a marginally new high by 2 ticks, and we closed below yesterday's lows. The EIA came out and announced that there was an injection of 110 BCF. Market was expecting 105 BCF. And so we're down 12.5 cents and probably heading into the 430s, which I think is good. I think it's a buying opportunity.
Okay.
Inventories are still 27.4% below last year's level, 31% below the 5-year average. Good support at 430, things in a range, and we get a chance. I kind of like selling puts on things like UNG here, and I like buying the dip. So, next week will bring another injection number, and if the heat cranks up, the price will crank up, and it's summer, so heat will crank up.
Yeah, it's interesting that bringing us. This has been here for quite a while, huh? Interesting. So if I bring
430, 480.
Yeah, if I bring it back to February 2014, right? I mean, yeah, interesting.
Yeah, well, I mean, it's a natural reaction to the numbers today. So scale down buyer here, scale up seller when it starts moving up.
Right.
I think that's the way to trade that right now. The other thing that's interesting, copper. If you want to take a quick look at that.
Yes.
I was very bullish on copper last week, as you might remember. We've moved up from about 304 to about 317. I think you take profits here. I think you might even go a little short here because we could be putting in a little bit of a double top here in the short term in copper. I wouldn't be surprised to see it pull back. Now, the only caveat there is if gold and silver really blast.
Yes.
Copper could follow, but copper does have a mind of its own. It's more industrial, and it's very China-centric.
Yeah, well, there's no doubt about that. And I guess, one of the things that is happening in China is that, and this is in the copper market too, is that the amount of
financing deals.
Yeah, and basically the Chinese government themselves, they're cracking down about the amount of fraud, and they're wiping people out all over the place, man.
Hey, they found $15 billion in fraud in gold deals today in China, financing deals.
Yeah, it makes sense. I mean,
there's going to be high-value commodies.
Hey, folks, what happens in China? You don't want to be in China and get caught with a crime like that because they just kill you. I mean, it's
well, they actually tie your hands behind your back and serve you rice, and you never know when the bullet's coming, but it does come.
Right.
And then they send your family a bill for the bullet.
Yeah.
It's
that's pretty crazy.
Yeah, it's an interesting way to look at dealing with fraud. I think it would probably clean up Wall Street pretty quick.
Oh man, would it? Oh man, could you?
Oh my God!
Could you imagine? Seriously, man.
It's like unbelievable, huh?
Yeah, it really is. What's so funny is that I looked. I love that. CNBC folks. That nighttime program they had is unbelievable. And what is the one that's? The fraud, the greed.
Oh, greed. Yeah. American greed.
Those programs are great, man. It just blows my mind, too, that it's like over and over again. And and last night, the one was that guy that had the PFG, the futures business.
Oh, right.
And it was amazing, folks. I mean, I remember when I read it, that fraud is going on for 20 years, but it's like crazy, man. It's crazy that they can get away with things for so long. You know what I mean?
It is amazing. I mean, a lot of these stories, it's the confidence games, pyramid scheme. There's so many of them out there. That show could go on forever because all they have to do is pick the court records. There's a new case every day.
And they do a good job of it.
They do.
I just have to turn it off sometimes, but they do a good job of it, man. There's no doubt.
Sometimes I worry that watching these shows, they're putting these shows on the air. It gives people ideas.
Well, it's
kind of a how-to.
It's how to stay clean, folks. That's how you better be getting out of it. You know what I mean? They're all going to jail. Listen to this. Listen. Yeah. This is pretty wild. I was just talking to one of my buddies today in South Boston. So, folks, they're doing a show they're doing a movie on Whitey Bulger, and Johnny Depp's going to be Whitey Bulger. I was on the phone with one of my buddies.
Wasn't Nicholson Whitey Bulger in that?
Yeah, he was.
In that movie.
He was
inspired by that character.
Yeah,
he was great in that movie.
The
Departed.
Departed.
Yeah.
But now what's going on is that one of the Tigers are saying, Mr. Bill, too much hair. But check it out, Bill. So, because when I was talking with him, he was saying you can pull up the pictures. I says, no, I was outside. they got Johnny Depp and evidently, and I know what Whitey looks like, and Whitey still slick his hair back big time. So Johnny Depp's running around South Boston with his hair all slicked back. Man, I gotta look at this. I know.
I'm sure that'll be a great movie. Well, it's a great story.
I love Johnny Depp. I think I can picture him being Bulger in a second.
Bulger was such an interesting character. I mean, he was an FBI informant and a mobster. And
totally.
What a great story that is. Oh my God, made for Hollywood.
Yeah, sick. Totally.
Made for Hollywood.
It was made for Hollywood, no doubt.
So I look around this commodity world. We have Iraq going on. We have low interest rates. I tell you, in my stomach, I just feel this gold has got to lurch. This gold and silver going to take off.
I agree. Technically it's there. Fundamentally it's there. Because what you are going to have, folks, okay, is, well, this is my speculation, okay, but you're going to have 3 countries over there in Iraq. It's already done. I mean,
it's got to be.
All the bureaucrats are basically glossing over it, but guess what? It's done.
Go ahead.
It's done. I mean, and they have a huge amount of resources, and the real key is going to be, okay, what are they going to use? Are they going to carry around bundles of cash, of gold, of silver, of euros? What are they going to do? Do you know what I mean?
Yeah. You know what? Talking about precious metals for a minute, platinum's very interesting here. Yeah. So they settled this strike in South Africa. All right? So it was Anglo-American Platinum, Impala, and Lonmin.
Yes.
And they gave in. They raised wages big time. So that means production cost of platinum has just gone straight up. And I think it costs between $1,300 and $1,500 an ounce to pull platinum out of the ground now. That depends a lot. South Africa is the biggest producer,
sure,
and it depends a lot on the foreign exchange between the rand and the U.S. dollar. But I think that this is initially when they settled the strike, the price came down. It was a sell the rumor, buy the news. I think in platinum. I think platinum's going to do very well now. Higher production costs. There's a deficit. We missed out on like 5 months of production here. Automobile sales are good. Demand for platinum and palladium are good. Demand is outstripping supply. These things look good. I mean, the whole precious metals complex looks good to me.
Yeah, no, I'd agree. So, hey, listen, we'll see. We'll see where this baby goes.
Tomorrow is another day, a crazy Friday, perhaps.
Tomorrow's another day. Well, let's pull up here. Let me see if I pull up an Eagle first. It's staying above its breakout area. Royal Gold, RGLD, is a great indicator for gold itself. Oh, this is pretty. Okay. So RGLD, folks, all that matters with RGLD on a gold on a company basis. They only have 21 employees, okay? All this is royalties, and it's gross royalties. So they take in $78 million a quarter right now with 21 employees.
Wow.
Yeah, I know. It's a great
Hey, look at the
plan.
juniors today. The juniors are up. That's what kind of got me excited.
That would make sense. Let me look.
I think the NUGT, that index?
UGT, okay.
The nugget.
Okay, so inside that, what do we got? Yeah, because see, once these go. Oh, yeah, I know. Hey, let me look at something. I saw this. Mag Silver came across again. They're MAG. They're doing a secondary. Let me show you something on this, folks. If this is the same company, I got to see this thing. This is the same company. So watch this, folks. This is important to understand. This company right here, right? This blows my mind how they've got away with this for so long. Okay, so Mag Silver has a market cap of $681 million. They still take no money in, okay? This has been going on for years, and now they're pushing out another $75 million bought deal. You don't want to own stocks like this, folks. Let me tell you. I'm not kidding. This one here.
I hear you.
And now this is what's crazy about this. This equity itself technically is not a bad setup, okay? But I've been following this for like 12 years. And like for 12 years, they're supposed to be getting close to getting gold. And inside this gold metal market, right, some of these companies, they just keep taking people's monies. And I would not get in that company, man. It
agree.
It blows my mind.
I agree.
Andy, you have a great night, safe night, of course.
Have a great one, Tom. Talk to you soon.
Okay, man. You stay right there, folks. We'll come right back. Dow Industrials finished down 21. NASDAQ was flat. S&Ps are off 2. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We had Walmart down 71. We had GM down 19. 3M was flat. Oxy was up 2. Coke was flat. You had ExxonMobil down 11. If we go over to the oil services, we'll start with ExxonMobil. We take a look at ExxonMobil. What you have out here, she got to a low of 100 today, closed at 102. And she came into this lower swing point with 8.4 versus 9.3 million. So she didn't hit the swing yet. I suspect she's going to build a little bit more cars and go after that swing point once again. Chevron, CVX, we look at the second largest weighting inside the XLE. Chevron came down to the 129, rejected lower price. That will probably do a little bounce out here. Yeah, she can bounce pretty easily into the 130 area. Walmart, we take a look at Walmart. We have Walmart. This is going to be interesting. She's going to the bottom of the range once again. So she came into her lowest swing point of 74.91. She closed at 74.91. She did 6.9 million versus 6.5. So Walmart, very well. Let me just see if they're coming out with numbers tomorrow. This could get interesting. No, they don't come out to 0700 on the 14th of August, so they already come out. So Walmart, folks, is set up to basically jump the creek right now. It's, it's right at a swing point, has enough volume. Your lowest swing in Walmart is the 72, 71 area. That will get you getting closer. No, she's got a wild way to go. That only gets you to the highest swing point. Walmart would have to get all the way back inside $70. But it's working its way down there. Big Blue. Big Blue has been struggling for quite a while out here. We'll have with Big Blue. She was flat today. She's at 180, but she's making her way down to this 175 area. The Boeing, which got hit yesterday, she hit a swing point, has some juice underneath it. Continued flat market today, up 96 cents at 128. But what is game there is 118.77. When we go overseas and we take a look at what happens overseas, if we go to the Asian market first, Asia last night was not bad. You had the Nikkei 225 was flat. Hang Seng was up 1.5%. Shanghai was up 0.6%. Europe, little different story over in Europe. We had the FTSE flat. The DAX was down 0.6%. I'm going to go over to the DAX first in Germany. We'll take a look at the DAX. So we had with the DAX. She got into lower price. Yesterday we had volume. Oh, I see what happened. Okay, cool. So the volumes in the DAX and the FTSE come in. I get them about 8 or 9 o'clock Eastern Standard Time, folks. But what you had yesterday was this. Your swing point on the DAX was 98.29. The volume was 79 million. Guess what? We came into that with 82 million. So you're going to see higher volume again today. We closed at 98.04. It's not in the lower range yet. The lower range for the DAX is 97.33. That number, is it? Yes, 90. No. Ooh, this is interesting. Yes, 97.94. So we're right, very close to it. We're 16.94. We're 8 points away from it. Now, this is going to be interesting. This is going to be important tomorrow. The DAX being inside that lower range, folks, goes like this. Two different things end up happening. It would say that the breakout from May 26th, false break topside. We stayed up there from the 26th, full month of trading. You stay over the high, you come back inside the range. And this is a range that had been going on for 5 months. What's wide open is the other side of that range at 89.13, and it's particularly wide open because that's a high volume low. That's where it will go. The FTSE, let's go take a look at the FTSE and the UK, because that wasn't as strong and hasn't been as strong. That hadn't been able to take out the consolidation it was in. That same type of consolidation, the DAX took it out the last month. FTSE couldn't make it. It has 4 swing points at its high. Yesterday, 568 million versus 600. So the FTSE had a little less volume, but it's already into a failure operation. It doesn't have to go to the very lows of the consolidation, which is 6,400. What I do expect you're going to see 65, though. So that's going to be wild how that whole baby trades out. Let's go to the TLT. We'll take a look at the 20-year plus. These bonds just refuse to go down. The 20-year plus today, it's crawling back to the high. We're at 113.41. The low of the high in May was 114.13. The high out there is the 115.19. We're going to see that hit. It's real possible that we're not only going to hit it, it's going to be another ABC structure on the way up. The yields out here today, yields are running on the 10-year 2.529. One of the Fed chairman, Bullard. So let's see what Bullard had to say out here. James Bullard, president of the Federal Reserve of St. Louis, said the U.S. economy is improving enough to withstand an increase in short-term interest rates next year as growth picks up. I'm starting to think the economy could tolerate at least a little bit of the central bank getting back to a more normal stance. Bullard, who favors interest rates rising, raising the interest rates in the first quarter of 2015, said on an event today. The rates, what's interesting is that Bullard was a real, let's see, he wasn't a dove, he was a hawk on the rates about 2 or 3 years ago. Then he went dovish. Now he's basically coming out and saying, no, he thinks they can raise them. They're not going to raise them, folks. The thing that gets interesting here, right, is this. When we look at the rates across the world, that's one of the main reasons I'm thinking that, hey, they're not going to raise rates. But what the sniff of raising rates, okay, will basically toast this market in 2 seconds. So I'm not sure how. At some point, I suspect they're going to have to raise rates. I'm hoping that everything is cool when it happens. But I suspect also what has to be in place before that is happening is that there has to be more jobs that are happening that are actually, people are actually getting paid basically a decent wage. So we're not going from a middle class down to, a drop in the middle if there's nothing there. Oh, I saw a statistic. Check this out. This is really cool. I talked about this before. Where is this? This is about the amount of generations that are coming up, folks. And there's huge numbers in the United States that are coming up, okay? So there's going to be plenty of demand for everything and anything. You stay right there, folks. We're going to be coming right back. The Dow Industrials finished down 21. NASDAQ was flat. S&Ps were flat. Gold trading at 13.17. Silver 21.09. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you, sir?
I'm doing great, man. How you been?
Oh, can't really complain. First of all, I wanted to thank you for the bargain re-up on the gold report. I've been getting it for quite a while, and for a couple of years there, it was like an insurance policy. I'd say, oh, I better buy gold, and the gold report would say, oh, no, not yet. And lately, it's like a winning lottery ticket. So it's working really well all around.
I appreciate the feedback, Marty. Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is Authors Unknown. The start to a better life, or a better world, or a better future is simply our belief that it is possible. It's all right inside you, folks. Grab it and have a blast with it. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow down 21. NASDAQ was flat. S&Ps were flat. Gold contract down to $570. At $1,316. What you have with gold out here, folks, is this. Rejected lower price again out here. Had it down about 12 bucks. Had lighter volume. We are at 1316, and we have game out here, folks. The next swing point higher is up there at that March swing point. 1368 is the low, and 1392 is the high. It looks to me that we're building cause to make a run right up into that area. We're going into a Friday. Fridays are always high volatility days. Not always, but when you have a trend going. The trend's going down, that's when you can come down $50, $60 on a Friday. Trend's going up, that's when just the opposite can happen, no doubt. The thin days, but what does happen in the metals market on a Friday is that folks get worried because once the pit closes at 1:30, our trade will stop at 4. Nothing opens until Australia opens at approximately 7:30 Eastern Standard Time on Sunday night. So it's who has the hot potato. When things are going down, when things are going up, what ends up happening is there going to be some type of conflict across the world, and people are going to run to gold. What they want to do is they want to close their short positions over a weekend, or, in fact, they want to hold gold, hold silver, hold something as a metal, as a hedge going over the weekend that something's going to happen. So I suspect tomorrow we're going to have a highly volatile day. Don't forget, in the morning, of course, Steve Rhodes kicks us off. And right after that, on Friday mornings, Darryl and I, we do a show sponsored by Nadex. We'll be out there trading those Nadex products. Silver. How we set up in silver? Silver's 21.11. Same type of setup. Silver is stronger than gold at this particular point. And silver looks to me that February high of that 22.22, that also wants to get hit. The bonds, the ever-ready bonds, they just don't stop. What you have out here in the bond market is that they're out of the low range right now. We're at 125. That little baby, they want to get up to this 126. After the close out here, we had DuPont come out with numbers. The DuPont closed at $66.70. It's trading down $1.50. Numbers go like this in DuPont. They're cutting their forecast. The consensus was, there she is. Where are we? The consensus was 430. They come in at 410. So the bottom line is they're not making their numbers. DuPont itself has been in a long consolidation, and it's been at these highs since going back to March of this year. She's going to basically go after a lower swing point, which is the 66 area. If she has volume there, you'll see DuPont down into the 62 pretty quickly. Nike came out with numbers. They closed at $76.86. It's trading up $2 at $78.95. Numbers go like this on Nike. The estimate was 75 cents. They made 78. Future orders are up 11%. Worldwide future orders are up 13. Check this out, man. That's intense. Future orders worldwide are 13.3 billion. It's a big number. They expect fourth quarter revenue to be. Oh, the estimate was This was fourth quarter. Estimate was 7.34 billion. They took in 7.43. So you can see when someone's coming in with clean numbers, folks, what ends up happening is that the bottom line number, the earnings per share, and the top line number, gross, that's when it comes in clean. Gross margins, checked out these gross margins. These are huge. The estimate was 44.7. The gross margins are coming in at 45.6. Big numbers. Big numbers right across the board. There's no doubt about that. 30-year bond. Let's go back to the 30-year bond. We have the 30-year bond is this. 30-year bond right now, we're at 137.05. And what is game up here on the 30-year bond is 138.10. Now, check this out. I got a couple statistics here that are pretty intense. I want to thank Paul Sienna. He's from Bloomberg. They were in my office this morning. But check this out. He brought in a couple charts, and this is a chart guy. So one of these books he brought in for me, I could pull this up, but I can't pull it up that quickly, so I just got to read this for you. And what it is, it's the longest overbought trends in S&P history. And the trend that we're talking about right now is the number of weeks that you're over the relative strength index, that it's over 50. So bottom line is that when you hear the statistic, folks, these are some heavy statistics. Right now, we are in the, let me see, where are we right now? We're in the, here we are. This is the 83rd week that we are over and have been over on a consistent basis, that we've been over 50 on the RSI. Let me give you some of these stats, though. These stats are pretty intense, man. Okay, so, and what he mapped out here was this. He mapped out the times in the market that you've been over them, and then what happened after the fact. Right now, when you look at some big numbers, this is how it goes. In the 1928 to 31, you were over at 67 times, and then, of course, you know what happened there. The market blew up. There wasn't all blow-ups, by the way, okay, but there was a couple. In 1996 to 98, it was 68 weeks. 41 to 45, it was 69 weeks. 1957 to 62 was 72 weeks. 91 to 95 was 73 weeks. So we're at 83 right now. I remember that one in 95. The one in 95, when that first downdraft came, folks, what that was like a razor blade. But it was a heavy downdraft. 62 to 67, you were in 79. 94 to 98, 79. 43 to 49, 94. The largest one ever was 1953 to 57. It was 102 weeks. And when you take these, and then what he did is he did a percentage of, number one, how many weeks you're over, and then what happened after that. So the largest downdraft, of course, was the 1929 one. Even 3 years later, actually 3 years later, this is pretty sick, 3 years later, after the 1929 one, you were still down 75%. All the others, though, were up after 3 years, except 1946. But if we just take what happens in the next 3 months after this, or a month after this is what you have. 94, you were down 5%, big deal. 65, you were down 1.7. 29, you're down 30%. 1998, you were down 14.4%. It gets to the 98 one's kind of interesting, because what did happen there is that the market never came back, even 3 years later. So I thought that was kind of interesting. So what you can get out of this more than anything, folks, is this, and I'm sure you heard this many times. You can get oversold markets and overbought markets, and they just keep stretching. And when you look at the statistic here, right now, going back, there are 3 other times that have stretched longer. 1943 to 49 was 94 weeks. 1953 to 57 was 102 weeks. And at the end of this week, we'll be at 83 weeks. So, wild. 877-927-6648. We go take a look at the XAU, the HUI. XAU, with the XAU is done out here today, folks. Rejected lower price. We're at 98.97 right now in the XAU. We busted last week. You busted higher with volume. That XAU looks to me like we're going to 107. The HUI. What do we have with the HUI? Gold Bugs Index, we're at 236. That wants to run up to the price point of 255. If you'd like to test drive my gold report, folks, great time to do it. The way you can do it, come over to our website at TFNN. You go to newsletters, go to investment newsletters. You can test drive the gold report 30 days. If you'd like to test drive my daily newsletter, go to newsletters, trading newsletters, market insights, can test drive it to 2 weeks. Stay right there. We'll come right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now let's go over to our man, Mr. Basil Chapman, as we do each and every Thursday, folks, at 40 past the hour. Don't forget, folks, Basil has an outstanding show right here every trading day at TFNN, 11 to 12 Eastern Standard Time, the Target Technicians Hour. You can also test drive his newsletter. And the way you do that, folks, you go to TFNN, you're going to go to newsletters, you go to trading newsletters to the opening call right there. You can test drive it 2 weeks absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day?
Very good, thank you.
So
yes.
has the heat come into Boston yet?
It's just coming in right now, yeah.
Just coming in, okay.
Yeah, coming in, humid.
It's about time. Oh, the humidity's coming in, yeah. That's
but
heat.
you know, we can't complain because that winter was a long winter.
You better not complain, exactly, man. You need
absolutely.
some warmth in those bones, man.
That's for sure.
So, am I looking at the Dow right now?
Yeah, we're looking at the Dow. This is my daily chart that I show my subscribers every day, and also when I do my show at 11 o'clock Eastern Time, as you mentioned, I always show these charts. So what's really important about this chart is that the Dow has been in, although I haven't seen many chart packages that show it, but if you look at this, I'm just going to extend it. This is already tomorrow's report that I've written up that the subscribers will get for tomorrow. Look how long the channel has been in place. There's been a channel that's been going on since the low of the 11th of April at 16,015, and the price, what I call, it's an up channel. Then I call this inside track, the little green line and red line at the top.
Yeah.
A tiny little track at the top, tiny little track at the bottom, and that's called the buy zone. The top is called the sell zone. And look what happened. The price got repelled every time it got there. When it went to 16,970 on the 9th of June, it pulled back, and it pulled back, made a cup formation. And that cup formation, I'll show in a moment in two forms. But right now what happened is we've got the Dow rallying to a slightly higher height, went to 16,978, 8 points above the high of the 9th of June. Then it makes a little doji candle and it pulls back, and now the 9-period moving average that had been support is becoming resistance. So we're going to be watching that real closely. So for my subscribers, we have gone short the Dow, keeping a tight leash on this, because you can see that we keep finding that every time the market pulls back, there's buying strength, and the market's managed to bounce towards the end of the day. Well, what's interesting here is that the MACD, the moving average convergence divergence, did go negative, but the distance between the fast moving average, I call it the fast moving average, is actually the 9-period differential, and the red line, it's the fast moving average, and the red line, the slow one, is narrow, and the stochastic has expanded. So that allowed for a little bit of strength, and it bounced right off this green line, which is the support line that I call the buy zone or propellant zone. So it's going to be really important tomorrow to see if, going into the end of the month, between tomorrow and Monday, if there's a bounce, and whether the bounce is able to get back into the 17,000s, because if it doesn't, and there's a failure, and the Dow even goes halfway into today's candle, goes underneath 16,800, I think that would be a very big negative. But what we've done for my subscribers is we have a mix. We have long positions and we have short positions. And one of the long positions I have is Siri, which is Sirius XM Holdings. My thinking here is that if the automakers are starting to see some traction, and in fact, we are along one of the automakers that's doing very nicely. But if that's occurring, then probably there's a greater chance that Sirius XM Holdings is going to be included, and more people will be signing up. So there's kind of a fundamental reason, but at the same time, there's a technical reason. I'm going to show something here. This is from my CD, Introducing the Chapman Wave, which is available at TFNN. It's a CD book. This is slide 311 in a section called Cup Symmetry, and it shows a pattern that goes in a cup formation with the left side arc going down, and then a price time match going right back to that previous left side lip. We call it a lip on the left side. That's a beautiful one. Now look at this. I did the same thing for my subscribers because that's what we've been following, this particular pattern. Now I'm going to pull Siri right across here to show the daily chart, and there it is. There's that cup formation. And you've got the left side. I've got in, and let's see how it's showing. I think it's showing quite nicely. So the left side in this little reddish, that's the way down. And then the right side, I always find what I call a plumb line is a particular bar. If it isn't the exact low at the bottom, I always try to find a particular bar. That's very important. And it's gone right to the right side. And today, in fact, is the right side that had to get into the 3.49 area, and the high today was 3.46. We've already hit the 3.49. So I love the chart pattern. The little black line shows that it's walking the 9-period moving average. Got to be a little careful here because I'm pulling this back again. You've got the same pattern now. This is the 100. I call this the 4-panel view. This is the daily right here on the left. In the middle is the weekly, and that's gone to a leg A. It'll be a peak A if tomorrow it doesn't break above 3.49. And the monthly chart is just starting to break out, so that's a positive. This is the 120-minute chart, and you can see there are a couple of these cup formations. So far it's acting very well to date. Acted going into the close, it just suddenly picked up steam. So we're in a nice position. We're in a long position from the 325 area. It's up in the 349s, 346, 349, and if it's able to get to 351, that'll be very positive because it breaks out the weekly chart. And then all of a sudden you're going to this congestion area between 349 and 352 and nicely above the 200-period moving average. So far it's been working out. So we're in a mixed position here with some long positions, some short positions, and we're going to see. I mean, there's no question that the Fed has made it its objective for 5 years now to see that stock prices go high, and we'll see how long they can keep that up. But I'm getting a little nervous about some of the action I'm looking at on the shorter term, especially in some of the sectors which are just bumping into resistance.
Yeah, I don't know if you heard me a little bit earlier, but I was Bloomberg had dropped off a couple chart books out here today.
I want to show you something. Yeah, tell us about it. I'm getting something ready.
One of them was, now these are live. They just made them themselves. The kid made it, which is really cool. One of them was the number of weeks, the longest overbought trends in S&P history. So right now there's 3 longer ones than we have right now. Right now, and what he did, Basil, is he took the RSI, this being over 50 in a weekly, okay?
Right.
And right now, this is the 84th week we're over it. And in history, the only time that it got further than that, in 1943 to 49, it was 94 weeks, and then 1953 to 57 was 102 weeks.
That is amazing. I'm showing a chart here that I gave to my subscribers. I sent it out. Oh, I don't know. It must have been. It says, are we here waiting for peak D?
Yeah.
And that means the match with 2007.
Yeah.
And we did make the peak D, and now we're going into leg E. And if you look at this, the match here, you see there's the D that was in 2007, right?
Sure, I see it. I see it.
In February
and if you're driving in your car, folks, what Basil has up there, that chart goes back to what? That goes back to...
Actually, 90, actually. I can go back
cool.
further.
No, that's all right. I just want to explain to them. That's all. Go ahead.
Now, what you were saying, these are points that are... When we look back, that's when the points that you're making right now become the most pertinent. When you're in it at the time that it's happening, it's very difficult to actually extrapolate that data and just to get an exact fix. But I just wanted to show that we are still in that extension, that the match from 2007 is still going on because we're in leg E in June.
With that chart there, looks more parabolic than we even are.
Doesn't it? It's amazing, isn't it?
Yeah. Have a great one, Basil. A safe one. Look forward to the show tomorrow.
Thank you very much, Tom. Have a great
evening. Stay right there, folks. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. You had GoPro Go public out here today, folks, that had opened at the $25 level, $24 level. Traded out to 31.34. Twitter got some juice underneath it. A couple of analysts say Twitter's going to be worth a lot more money. We'll see. I was up $1.98, trading out at 41.44. Bed Bath & Beyond, that got smoked. They come out with the numbers last night. That was down 441. Huge volume in that baby. Let's go over to Twitter for a second and let's take a look at Twitter. So Twitter right now is at 41.44. She's off a low, and that's just a counter trend bounce. Let me pull this back, put it in for a year and a weekly. So Twitter's, started out at $40, because up to 71. It's at 44, and the poor thing, it's never even tested its low yet. So check this out. This is a high volume low at $29. That baby's going to get tested. Yeah, it's after this downtrend, you can expect a counter trend bounce, but she's going to need a lot more juice than this in order to get into higher price. So she's got some problems. Alibaba, folks, Alibaba is going to be trading at the New York Stock Exchange. Now, that was a huge win for the New York Stock Exchange. So Alibaba plans to list its shares on the New York Stock Exchange, cementing it the 220-year-old market's rebound, newfound strength in technology companies. The decision is a blow, of course, to the NASDAQ, which was competing to become the venue for what could be the largest IPO in the United States. Alibaba named the exchange in filing today, saying that it plans to use the ticker BABA, B-A-B-A. Pretty amazing. So that's a big win, no doubt, for the New York Stock Exchange. Politically out here, what you did have the Supreme Court's coming in with the rest of their numbers. What this just came across, U.S. Supreme Court curbed the president's power to make temporary appointments without Senate approval, backing congressional Republicans and dealing a blow to President Barack Obama. The justice ruled unanimously that Obama exceeded his constitutional authority when he appointed 3 members of the National Labor Relations Board in January 2012. 4 Republicans appointed justice would have gone even further in limiting the appointment power. The case was the court's first look at the constitutional provision that lets the president make temporary appointments to high-level posts during Senate recesses. The decision means the Senate can all but nullify the recess appointment power by holding brief pro forma sessions every few days. We must give great weight to now. This is this quote is going to be from Justice Stephen Breyer. We must give great weight to the Senate's own determination of when it is and when it is not in session, Justice Stephen Breyer wrote in the court's majority opinion. Chief Justice John Roberts and Scalia, Thomas, and Alito would have ruled on more far-reaching grounds. They said that the recess appointment power applies only after a year-long congressional session ends and before the next one begins, not during breaks within a session. Writing for the group, Scalia also said valid appointments could be made only when vacancy itself occurred while the Senate was adjourned. So that's going to be more gridlock. There's no two ways about that. Gridlock in a huge way. That's for sure. We go over and we take a look at some of the Dow stocks out here. ExxonMobil, the largest equity inside the XLE. That had come off the high on Tuesday, had volume off that high. We'll see whether it stays inside this lower range of the 103.02. That's the range that it is in right now, and it does look like it's going to stay in that lower range. I want to go over to this GoPro again for a second. We'll pull up GoPro. So you got GoPro today, $31.24. That gives that a market cap of $3.8 billion. And let's see if they already got these numbers up here. It'd be pretty cool if they do. Okay, they do. Okay, so check this out. Man, this company takes in a lot of money. So they get a market cap of, what did I say, $3.8 billion. Revenues, this is how the revenues go. Right now they're taking in, well, yeah, that's quite an expansion. So check this out. In 2013, first quarter they took in $255 million. Second quarter, $177. Third quarter, $192. Now watch this jump up. They went from $192 to the fourth quarter of $361 million. Right now they're taking in an average of $233 million per quarter. They're claiming in the last quarter of this year, they plan on taking $439 million. I guess that turns into Christmas. Earnings per share, they've been making money. There's not a loss that's out here that I can see. Going back to 2010, they've been making money. The segment, how and where they sell their products, folks, this is what it is. In the America, that'd be South America and North America, 550 in the revenue in 2013, 557 million was in the Americas, 311 in Europe, the Middle East, and Africa, and 116 million in Asia Pacific and other countries. Growth-wise, this is what they plan. They plan on growing a 3-year growth plan. This is they plan on growing 81% in South America, North America. They plan on growing 146% in Europe, Middle East, and Africa, and they plan on growing 184% in Asia Pacific countries. There's no doubt that with them going public, they get more press. That also is going to turn into more cameras, because I don't have one yet, and I want to go buy one. You've seen some of these pictures on TV today. They were incredible. There is no doubt. And the CEO, I think folks are really going to like that. I like them. I mean, the MO and his speech pattern, what he was talking about, he had it together in a huge way, too. Well, of course he has it together. He's got a $3 billion company. Bottom line, though, it was a good interview, and many of the interviews were talking about, is this a one-time deal? We're in the deal of cell phones. Cameras are everywhere, and he was explaining why his GoPros are different, and they absolutely are different. If you've never seen some of the videos that folks take using the GoPro, folks, they're extraordinary. They're absolutely extraordinary. They're over the top. And I suspect that we're all going to end up having them, yeah. As he was impressive, man. There's no doubt. What's really cool, what I thought was interesting, folks, they asked him a question about an entrepreneur in general. And he said when he got out of college, he was going to give himself 10 years. And what he had done is that he started one company. It didn't work out. And the guy was a big surfer, adventure guy, period. And that company didn't work out, and he was still only like 26 years old. So what he decided to do is he decided that grab some of his friends, going to go surfing for a while to get some inspiration for the new company. And there was a couple of different things that grabbed me there. Number one, the aspect of that you give yourself a time frame in order to be an entrepreneur. That's really smart. It really is smart. And this is why. Time frames in general, and this is something that I don't do, and I'd love that I may do. Time frames in general are great because deadlines are great. There's no two ways about that. Got to get it done now, that's it. And sometimes I do. Most of the time is, deadlines I'm not bad at. But time frames in general, I thought what he was doing there, that he was saying 10 years, that's it. So when he went on that surfing deal with his friends, he had 4 more years in order to really get a product, get what he wanted done. I thought out of that interview, that was the most that I grabbed in particular. The reason being is that in order to go public, which he wanted to do, and I wouldn't be thinking of going public, but I'm giving you this whole story so no matter what you folks want to do, is that when there is a time frame that is involved, more things absolutely do get done. Like, I love doing deals. Like the real estate fund. The real estate fund is a 5-year closed-end deal. I love doing deals like that because what happens is this, is that when you have times like that, I love getting in, getting it, and getting out, because what happens in your own head is that there's action that's always happening, but then you can think after that also. There's not just a never-ending deal. So I thought it was really clever of him, and he is evidently bright beyond belief because he was only 20. Yeah, he was only 20 when he decided he's going to give himself 10 years in order to basically get that done. And you got to love it that he's in a business that was adventure to start with. It's venture every day. and you basically, when he was doing it on the surf deal, he was doing it so that everyone could surf better. He had a wrist on his, he had a watch, a camera on his wrist with the surfing, and they were using that so that they could figure out how to surf better. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. We had the Dow finished down 21. NASDAQ was flat. S&P's off a couple. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. And, there's been that big war going on about Argentina default bonds. Now, they lost that war at the Supreme Court. And they have to deal with basically a couple large operators that own those funds. But it looks like this war is not over, because what Argentina just did about an hour ago is they deposited $1 billion to make the June 30th interest payment on the restructured bonds outside of the bonds that they have to pay. So it's going to be interesting, and you're going to hear a lot about that the next few days. Because what this specifically would be, particularly because it went to the Supreme Court, is what Argentina is trying to do is not default again, okay? The Supreme Court ruled that, guess what? They had a default, and in any type of restructuring, folks, okay, when a restructure takes place, you do not have to take the whole restructuring deal. You can take or leave it. There are certain bondholders that said, no, I am not taking that deal. Argentina took the case that, well, guess what? We're not going to give you anything if you didn't take the deal. Well, they lost the deal. It took 12 years in order to get to the Supreme Court, but they lost the deal. What that puts into play is that a default on a larger basis, all the bonds that they have out there, you default again. So we're going to see where this shakes out. When you talk about defaults, here, check this out. Fidelity just made, let me see if I can find this for a second. This is smart. Fidelity, everyone's in Boston's going to be happy right now. Here it is. Fidelity just made an additional $200 million in the last week. And the way they did this, so check out what they did. Fidelity Investments withdrew the heir of Energy Future Holdings Corporation and its creditors by playing hardball during restructuring talks, is reaping the rewards of a bidding war over the former TXU Corporation. Fidelity had seen the value of the $470 million of unsecured debt it owns in Energy Future parent company skyrocket as much as $200 million, according to Bloomberg. The bonds rallied this week after Nexter Energy Inc. and a group of creditors disclosed an alternative restructuring agreement that put a higher valuation on the Dallas-based power producer. Now check this out. This is the what you're going to see here is that how all these financial shocks go after each other, and the amount of money and large deals that are on the table, that they try to woo Fidelity, saying that, hey, if you didn't take this deal, well, first, here, let me read it. So Nexter attempted to woo Fidelity's corporation by saying its plan would have given the bondholders, that include the Boston-based firm, a $20 million or greater cash distribution compared to the Energy Futures proposal, according to a court document. That proposal would have created a path for the utility to take Energy Future profitable Encore Electric delivery company. Creditors are competing for the investment firm's support because Fidelity owns more than $1.7 billion of Energy Future debt through its capital structure, making the money manager a vital component of any restructuring proposal that seeks to resolve claims on 75 bonds and loans held by at least 600 lenders. Fidelity angered Energy Future and its creditors last October when the manager's stance helped dissolve negotiation that may have sped to a prearranged bankruptcy. Bottom line, they made a fortune. Fidelity declined to comment. Fidelity holds $471 million in the bonds issued by the parent company. That debt alone, just that debt, went up $200 million since the company went bankrupt. Data compiled by Bloomberg shows. So when you start playing with big numbers, folks, it is huge numbers that you can make and or break. And what ends up happening in all of these restructurings, by the way, when you have a bankruptcy restructuring, it depends, number one, where you are in line. Number two, more important, how much debt do you have? And in fact, is there any equity inside the company or asset in the company to pay any of the debt off? You know, so it's a tricky game. It's a neat game though, because what does happen in most of these is that if the analyst is done correctly, your probability gets pretty close as to knowing where everyone stands. The only time I've seen some bankruptcies really someone could take advantage of them is when you have an aspect that other companies are going down the tubes at the same time, and I'll give you an idea of how that would work. When the savings and loans were going south, what would end up happening is that loans that the saving and loans actually had, you could get those loans much cheaper than you would have ever got them in the marketplace. And the reason being is that the banks themselves were going down and going bankrupt. When you get into a situation that who's ever holding the paper is actually in trouble, then it's a field day. So if you ever see a situation like that, and you will see situations like that, folks, you know, hopefully we won't see them for a while again. But, you know, every 7, 8, 10, well, 7, really 9 to about 14 years. Every 9 to 14 years, these cycles come, and you know what? When that tide comes out, you find out who has no clothes on, and it's always many folks and many companies that have no clothes on, folks. That's just how it goes. The amazing part is that it's over and over and over again. And it's not going to change. See, it can change, and this is where you get back to the type of currency that we're in. We're in a fiat type of deal, and that's fine. But a fiat type of deal, you have to have bankruptcies. There's no doubt about it. What happens in the aspect of how everything gets fed into the system, it's inevitable to have bankruptcies. What I suspect could happen, because the interest rates are lower, is that it will take a longer time now to basically have that done. Oh, I know. There's one last article here. If I can't find it, I know what it said. This is pretty neat. Now, I had brought this up before, and when I brought up, this is months ago, and I brought up the aspect. So what it is, what I'm talking about is this, is that we know that the baby boomers were the biggest generation out there. Well, guess what? There's a larger generation. That larger generation, folks, is the 30-year-olds. Now, what's really cool about this, okay, is that as to saddle with debt, yes, that's a problem for them, okay? But what is not a problem for them is the amount of them that there actually are, and the amount of goods, houses, diapers, appliances, all the above that they're going to have to be buying. And it's at the very beginning of their making money. So check this out, all you baby boomers. Now, this is sad, folks, but us baby boomers, we even have it made even more. You know why? Because what happens, they're going to be coming up, and everyone, you should be out there hustling, because you want to be at the top of this peak. Always remember, whatever you think about, you bring about. Whatever you're focused on grows. Have a great night, safe night. Look forward to speaking right here tomorrow. Go get them, folks.